In 1980, the average UK house price was £23,596. The average UK salary was £6,000. That is a house-to-salary ratio of 3.9 times. If you save 10% of your salary for a 10% deposit, that is £600 saved per year for a £2,360 deposit. 4 years of saving, tough but doable. In 1990, the average house price was £59,587. Average salary was £13,760. Ratio 4.3 times. In 2000, average house price was £85,000. Average salary was £18,848. Ratio 4.5 times. Notice the ratio creeping up. It is about to explode. In 2010, average house price was £167,469. Average salary was £26,200. Ratio 6.4 times. In 2024, average house price was £290,000. Average salary was £33,000. Ratio 8.8 times. House prices increased 1,128% since 1980. Wages increased just 450%. And if you want to live in London, average house price is £535,000. Average London salary is £44,000. That is a ratio of 12.2 times. But it is not just London. Let us look at the regions. Southeast, £380,000, ratio 9.5 times. Southwest, £310,000, ratio 8.9 times. East of England, £320,000, ratio 8.7 times. Here is what this means in practice. To buy a £290,000 house, you need at least a 10% deposit, that is £29,000. If you earn £33,000, your take-home pay is about £26,500 after tax. Let us say you live frugally and save £500 per month. That is £6,000 per year. It would take you nearly 5 years just to save the deposit while paying rent, while prices keep rising. The average first-time buyer is now 33 years old. In 2000, it was 27. In 1990, it was 23. UK home ownership rate peaked at 71% in 2003. Today it is 65%. For people under 35, it has dropped from 59% to 39%. So the question is, how did we get here? There are 4 main reasons UK housing became unaffordable, and they all work together to create a perfect storm. Because number 1, we do not build enough houses. The UK has a chronic housing shortage, and it has been building up for decades. Experts estimate the UK needs to build 300,000 new homes per year just to keep up with demand. In 2023, we built 234,000. We have been undersupplying for over 20 years. That is a cumulative shortage of over 1 million homes. So why do we not just build more? First, there is the Green Belt. 13% of England is designated as Greenbelt land where building is heavily restricted. Now you might think this is all beautiful countryside and forests, but 40% of Greenbelt land is intensive farmland, industrial estates, and even car parks. Then there is the planning system. In the UK, getting planning permission is notoriously difficult. The average application takes 9 months to process, many take years, and rejection rates are high. This is because local councils are heavily influenced by existing homeowners who do not want new developments near them. This is called NIMBYism, which stands for Not in My Backyard. Let us compare the UK to similar countries. New homes built per 1,000 people, France builds 6 new homes per 1,000 people. Germany builds 4 per 1,000. Spain builds 3.5 per 1,000. The UK builds 2 per 1,000. We are building at half the rate of comparable European countries. And here is something most people do not know. Major developers often engage in land banking. They buy land with planning permission, then drip feed new homes onto the market slowly to keep prices high. Why? Because scarcity means higher prices, which means higher profits. The UK's largest house builders have profit margins of 15 to 20%. In Germany, it is 5 to 8%. So we have a planning system that restricts supply, developers who profit from scarcity, and homeowners who vote against new housing. This is cause number 1. Cause number 2, houses became investments. In the late 1990s and the early 2000s, something fundamental changed in the UK housing market. Buy-to-let mortgages exploded. In 1996, there were virtually no buy-to-let mortgages. By 2007, there were 1.3 million. Today, there are over 2 million. This created a new class of property investors. People who already owned homes could leverage their equity to buy second, third, and fourth properties. Today, private landlords own 4.6 million homes in the UK. That is 20% of the entire housing stock. Those are 4.6 million homes that could be owner-occupied, but instead are rented out for profit. Add foreign investment. The UK, unlike many countries, has virtually no restrictions on foreign nationals buying property. In London, 27% of new build sales go to foreign buyers. In New York, it is 0.3%. Entire luxury developments in central London sit empty. They are not homes, they are investment vehicles. Bank accounts beacons of bricks. For years, the UK offered non-dom tax status that allowed wealthy foreigners to live in the UK without paying tax on their overseas income. At its peak, there were 83,000 non-doms in the UK. Many of them bought property in London, competing with locals for scarce housing. When houses become investment assets instead of places to live, prices stop being about what people can afford and become about what investors can profit from. Property has been an incredible investment. If you bought a house in London in 2000 for £200,000, it is now worth around £600,000. That is a 200% return, tax-free. If you were already in the market, you won the lottery. If you were not, you got locked out. Cause number 3, cheap money. The third cause is monetary policy, specifically interest rates. In 1990, the Bank of England base rate was 14%. By 2009, it had dropped to 0.5%. In 2021, it hit 0.1%, the lowest in the bank's 300-year history. Here is why this matters. Lower interest rates mean people can borrow more money for the same monthly payment. For example, a £200,000 mortgage at 10% interest equals £1,755 per month. A £400,000 mortgage at 2% interest equals £1,478 per month. As interest rates fell, people could afford bigger mortgages. Sellers simply raised prices to absorb that extra borrowing capacity. Banks made billions in mortgage lending. Buyers did not get better houses, they just paid more. This reached its peak during the pandemic. With rates at historic lows and people stuck at home, demand for housing exploded. UK house prices rose 20% in just 2 years. Then in 2022, inflation surged, and the Bank of England raised rates rapidly. The base rate went from 0.1% to 5.25% in 18 months. For anyone remortgaging, payments doubled or tripled overnight. The market essentially froze. Prices did not crash, but transactions plummeted. People who bought at the peak with low rates are now trapped. They cannot afford to move because new mortgages are too expensive, and first-time buyers are still locked out. Cause number 4, population growth. The fourth cause is simple: more people, the same number of houses. In 2000, the United Kingdom population was 58.9 million. In 2024, it is 68.3 million. That is an increase of 9.4 million people, roughly the population of London. Much of this growth comes from net migration. In 2023, net migration was 685,000. That is the equivalent of a city the size of Glasgow arriving every year. If we assume 2.5 people per household, 685,000 people need 274,000 new homes. Remember, we are only building 234,000 homes per year. We are not even keeping up with population growth, let alone addressing the existing shortage. Add changing household structures. More people are living alone. Divorces create 2 households instead of 1. Students need accommodation. All of this creates relentless demand pressure. Basic economics: when demand increases but supply stays flat, prices rise. So let's recap. 1. We don't build enough houses. 2. Houses became investment assets. 3. Cheap money inflated prices. 4. Population grew faster than supply. These 4 forces created a perfect storm, and they all reinforced each other. Now here's the uncomfortable truth that nobody wants to talk about. Millions of people profited from this crisis. If you bought a house before 2000, you've likely made £200,000 to £500,000 in untaxed capital gains. You didn't work for it. You didn't create value. You just owned a house while supply failed to keep up with demand. Buy-to-let landlords built property empires. They bought properties with 25% deposits, had tenants pay the mortgage, and kept all the equity gains. Today, 2.7 million people in the UK own second homes or buy-to-let properties. Banks made billions in mortgage interest and fees. Total outstanding mortgage lending in the UK is £1.6 trillion. Even at low interest rates, that is tens of billions of pounds in annual interest. Major house builders made record profits. Persimmon, Taylor Wimpey, and Barratt all reported profit margins of 15 to 20% during the boom years. Their CEOs took home multi-million pound bonuses. Estate agents took their cut on every transaction. And politicians, 39% of MPs are landlords. Many own multiple properties. They directly benefit from high house prices. Here is the political reality. 63% of people over 65 own their homes outright. They vote in high numbers, and they do not want house prices to fall. Meanwhile, only 39% of under 35s own homes. They vote less, and they have less political power. This is why nothing changes. The people with the power to fix the crisis are the same people who benefit from it. The human cost of this crisis is staggering. 3.4 million adults aged 20 to 34 still live with their parents. Not by choice, by necessity. Those who do move out are trapped in expensive rentals. The average UK renter spends 35% of their income on rent. In London, it is 40%. After rent, bills, food, and transport, there is little left to save for a deposit. It is a trap. You cannot save because you are paying rent, but you cannot stop paying rent because you cannot buy. This is creating a retirement crisis. Previous generations relied on property equity for retirement. They would downsize or use equity release. But what happens when an entire generation reaches retirement with no property wealth? They will be paying rent on state pensions. It is unsustainable. The UK fertility rate is 1.49 children per woman, well below the replacement rate of 2.1. You cannot have children in a one-bedroom rental where you could be evicted with 2 months' notice. Economic mobility has been destroyed. In the past, you could work hard, save, and buy a home. Now, the biggest predictor of home ownership is whether your parents own property. The Bank of Mum and Dad is now the 9th largest mortgage lender in the UK. In 2023, parents contributed £8.1 billion to help their children buy homes. If your parents do not own property or cannot help financially, you are locked out. Talented young people are leaving the UK. Net emigration of UK citizens has increased 145% since 2015. They are moving to countries where home ownership is still achievable, like Canada, Australia, New Zealand, and parts of Europe. Social tensions are rising. There is a growing generational divide. Older generations who benefited from affordable housing are accused of pulling up the ladder. Younger generations feel betrayed by a system that promised them the same opportunities. This is not just an economic crisis, it is a social crisis. It is a crisis of fairness, opportunity, and hope. So what happens next? There are really only 3 possible scenarios. Scenario 1, prices crash. If interest rates stay high and the economy weakens, house prices could crash 30 to 40%. But this creates its own crisis. Millions of homeowners would be in negative equity. They would owe more than their house is worth. If enough people default, banks face losses. We have seen this before. In 2008, a housing crash would trigger a broader economic recession. Unemployment would rise and consumer spending would collapse. Nobody wins in this scenario. Scenario 2, nothing changes. Prices stay high and supply stays low. The crisis continues. Home ownership becomes entirely dependent on family wealth. Only people who inherit property or receive large gifts from parents can buy. Society splits into 2 classes, the property-owning class and the renting class. Politicians make promises but deliver little because the political incentives do not align with solving the problem. This is the most likely scenario. Scenario 3, government fixes it. What would it take to actually fix this? 1, a massive increase in house building. The target is 400,000 homes per year. Reform the planning system. Build on green belt land where appropriate. 2, restrict investment property. Higher taxes on second homes. Restrictions on foreign buyers. Limits on buy-to-let. 3, support first-time buyers. Shared ownership schemes. Government-backed mortgages. Deposit assistance. 4, a land value tax. Tax land, not buildings. Discourage land banking. Incentivize development. But here is the problem. 39% of members of parliament are landlords. Most members of parliament own property. Most voters, over 50, own property. They all benefit from high prices. Any policy that would make housing affordable would reduce the wealth of existing homeowners. That is political suicide. So while these solutions exist in theory, the political will to implement them does not. From 3 times your salary to 9 times your salary. From 23 years old to 33 years old. From 71% home ownership to 65%. From opportunity to impossibility. This is how UK housing became unaffordable. Not through bad luck or market forces alone, but through policy choices, political incentives, and a system that rewards those already inside while locking everyone else out. The question is not whether we know how to fix it. We do. The question is whether we have the political will to do it. What do you think should happen? Should prices be allowed to crash? Should the government intervene? Or is home ownership just over for this generation? Let me know in the comments. If you found this valuable, Subscribe for more analysis of the economy and the forces shaping our lives. Thanks for watching.